G'day everyone, welcome back to Pete's Investing. Today is June 27, 2023. This is the nat gas price update. On our weekly and daily, we're still in a bullish momentum. And on our hourly, we've broken down into a slightly bearish movement. And we've got a bit of a divergence happening in the next few hours. On the weekly, first off, we've got a, you can see here the triple moving average and the moving average of the CCI 150 broken up into a slightly bullish momentum, as well as the oscillator. We've got here the multiple moving average oscillator, and that's broken to the upside as well, and that's giving us this bullish movement on the weekly. So it's predominantly bullish trades only to be taken. On the daily, that also is in a bullish movement on the daily time frame, but you'll notice here we've got this in the short term we had this major resistance at 27.86. We had a minor resistance there at 28.37, and the price has actually broken through in the last few days above both of those resistance areas. Now, it was bouncing in between this support resistance lines for a number of months, and we did draw this target area in the short term for it to reach. Now, this divergence, basically, you can see here there's a bullish divergence on the CCI versus a bearish divergence on the price chart. And just to blow them up, making it a bit more obvious to see, you can see there the bullish divergence on the CCI, and it's still trending up versus, and I'll blow the price, and you can see there a bearish divergence on the price chart. Now, we did say when it breaks above that area, above this resistance, and then we expect it to hit this target area. So it could go anywhere between the lower level there, which is the 23% Fibonacci retracement of this wider time frame, or up to the 38% or even more. So there's no guarantee it's going to stay there. It could go anywhere, even touch that and bounce back down, or it could break through that to the upside. So there's no real way of saying where it's going to stop longer term. Now, again, it's broken up through that resistance, so it's a positive. But if you look at the hourly, we had a few divergences playing out here. Go back to this one, we had a bearish divergence versus a bullish divergence on the price chart. That played out well, it hit our target. There was another bullish divergence here versus a bearish divergence. That broke out and it hit the target over here, so it doesn't necessarily do it straight away. And now we had also another bearish divergence here on the CCI versus a bullish divergence on the price chart, hit our target. And now we've got a new bearish divergence on the CCI, and it looks like it's going to retrace at least to the downside, possibly towards this resistance area. So the way you would measure that, first of all, we draw the divergence on the two, on the price and the CCI. Then we draw a channel, and we draw that channel down to the lowest candle within that divergence range. So if the price breaks below this lower channel, then we're going to have an expectation to hit our first Fibonacci retracement area. So we draw the Fibonacci between the previous significant low to the high of that divergence. And if it breaks below that channel there, as I said, then we expect to hit a target area anywhere between that 38 to 50%. And I like putting in two Fibonacci levels. So that's our minimum target area at the 38% at 28.04. And it could go actually lower than that, but I'm just giving that as a minimum, and that's just a higher probability of successful trade in this area. It's a very small downward target area, I realise that, but again, some of these divergences are very minor in their nature. Some are a bit more extreme. So again, going back to some of this history, you can see there, this one didn't stop at the first Fibonacci level, it went higher, and I won't draw the Fibonacci's. If you go back to my previous videos, you'll see them there. So here we're looking at a bit of a retrace to the downside. Now, for this to fail, we need to see the price break above this channel and make new higher highs. But very importantly, we need to see we need to see this bearish divergence come up and go higher than that previous high there. If it does that, if it breaks up higher than that previous high, then this divergence won't play out, and it becomes invalid. And by that stage, if that divergence starts rising, if that CCI starts rising towards that level, by all likelihood, the price will also rise as well. which means you wouldn't have entered the trade. So that's where we are with that on the hourly. As well, we've got the, if I zoom out, we've got a bullish backtest and a bearish backtest. And as I always say, to trade those bullish or bearish trading activities, you need to trade when the weekly and the daily are in the same alignment. So in other words, here you can see the last few weeks have been long. You would have traded only long in that period, and that would have been an ideal area to go long. You can see there are a few long trades made in that area. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at this and other trading strategies. We do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.